All right. Welcome everyone to our Myeloma Financial Coach chapter. It's a mouthful, but we're excited to have you here. My name is Audrey, and I am the community manager at the Myeloma Crowd. We're super glad to have you guys here. So let's get started. This program is brought to you by the Myeloma Crowd, specifically within the Myeloma Coach by Health Tree program. Diana Valentine is our chapter head. She's a BCPA, and most importantly, she's our myeloma financial coach. So, brief introduction. Her husband passed away of myeloma, and that's her connection to myeloma. And then she's also worked in the financial field for quite some time and started collaborating with the Myeloma Crowd, and has just done an amazing job at coaching different individuals and helping them. So we're super happy to have you here, Diana, to talk to us about untangling our 2020 taxes. So I'll give the time over to Diana. And again, thank you, Diana, for being here today with us.
Thanks a lot, Audrey. Thanks everybody for taking the hour or so out of your time. I think this, for everyone, financial issues are very, very important. And unfortunately, it's the least thing or subject that we actually want to talk about or share with anybody, especially if we feel like we're having some problems. So I've made it my mission to try to help people to find resources that's going to help them in their financial world, and their families, so there won't be any surprises, and direct you to outside resources if necessary. So what are the things we're going to be talking about today is untangling your 2020 taxes. As you know, with the COVID, there's been a lot of additional resources available to people through both the federal government and through your employers, opportunities you can take advantage of on your 2020 taxes. And we're going to go through a lot of those. Not everything is not going to be inclusive, because we're just going to try to focus on the medical side, with a few things tied in at the end under our miscellaneous, but very important tax options you have available for 2020. So the goal here is to reduce your gross income that you report and reduce your adjustable gross income. And in order to do that, what I would like for everyone to do going forward, because you're getting a lot of your tax documents now, you're getting them in the mail, go through everything that you've paid out of pocket for any medical expenses, whether it's travel, co-pays, deductibles, anything you've paid for Medicare A, B, and D, anything you've paid for medical expenses out of pocket. Gather those things. In 2017-18, the federal government has required a lot of people to keep receipts in the event that you are audited. And that is very, very important. The auditing has not been as robust in the past couple of years as it has been in the past, but you just never know. And you always want to be prepared for that. One of the big things, if you are a cancer patient or you're taking care of a cancer patient, is the cost for your prescription drugs. I would suggest you go to your pharmacy. They have a list of everything that you've paid out of pocket with them. That is the very easy way to go through them. And your doctor office can present your co-pays or deductibles, whatever you paid to them as well. So those are two of the big things that you can have. Now, remember, medicine, transportation, any things you've done to your houses or anything, make sure you keep those receipts so that you can give them to your tax advisor. Now, I am doing this as a general information only. I would suggest that everyone, if you have questions, to refer to your tax professional, CPA, accountant, and they can be more specific regarding your tax situation. Okay, next slide, please. Funded copays and deductibles. And what I mean by funded, and a lot of you may be aware of this, if you have large expenses for prescriptions, you may be able to go through a nonprofit like Patient Advocacy Network, Cancer Cares, Myeloma, Leukemia Lymphoma Society. Some of those will give you funds to help cover expenses such as prescriptions out of pocket. You may also go to a pharmaceutical company where they may give you a prescription card or a prescription plan where they'll help you pay for your out-of-pocket costs for that. Now, those are called co-funded, and they also look at those as accumulator programs that were very big in 2018, which helped you to pay for those things, and you were able to apply those towards your deductibles. Well, a lot of those healthcare plans are now not allowing you to apply that to your deductible. And what I would suggest everyone to do is to contact your healthcare plan to find out if that is what they've indeed done. All of them have not changed it, but most have, and most are leaning toward that direction. So we're going to go through what is tax deductible, what isn't tax deductible, and what does apply to your medical deductible. Next slide. So what are medical expenses? Medical expenses is anything that you pay for any kind of medical care, whether that is for a diagnosis, cure, mitigation, treatment of a prevention of disease, and for the purpose of affecting any part or function of the body. And these include payments for legal medical services rendered by physicians, surgeons, dentists, and other medical practitioners. It includes the cost of equipment, supplies, and diagnostic devices needed for these purposes. In addition to this, it could also include devices or structural things to your home so that you can get in and out of your home, like ramps, pull bars, chair lifts, things like that. Anything that your doctor finds is medically necessary for you, and they write a prescription for, or you get it through a medical provider or supply, that could be considered medical expenses. Next slide. So let's go back to the previous slide. So we're going to find out what is tax deductible. You can only include medical and dental expenses you paid this tax year. So if you have paid prepaid things, you can only include what you've paid for this year. Medical expenses paid before death by a decedent are included in figuring any deduction for medical and dental expenses on the descendant's final income tax return. Qualified medical expenses paid before death by the descendants are not deductible if paid with a tax-free distribution from like an MSA account, medical advantage account, or health savings account, because those things are already usually paid for before taxes. Refer to your tax accountant regarding these things, because you may be included in some kind of maybe a manager program through your job where you get additional incentives or opportunities for your medical care or how your medical plans are paid for. Now, what expenses are included when figuring your medical expense deduction? I mean, now this list is very long, but it's not all inclusive. Like I said before, we're only going to talk about medical expenses that may apply to all of you, or to some of you, or most of you will participate in some of these opportunities. An ambulance, annual physical exams, although a lot of annual physical exams are not paid for, it's called preventive. So you may not have to pay for those at all. Artificial teeth, bandages, body scans, which is very big for people with cancer. Capital expenses, which would include medical amounts you pay for special equipment installed in your home or for improvements, if their main purpose is medical care for you, your spouse, or your dependent. The cost of permanent improvements that increase the value of your property may be partially included as a medical expense. So the cost of your improvement is reduced by the increase in the value of your property. The difference is a medical expense. If the value of your property is not increased by the improvement, then the entire cost is included as a medical expense. Included also are the operation and upkeep of these improvements. Improvements to property rented by a person with a disability are also medical expenses and can be written off. Cars with special hand controls and other special equipment installed for a person with a disability. Cars with a special design include the difference between the cost of a regular car and a car specially designed to hold a wheelchair, like a whole wheelchair lift. The cost of operation for using that car for medical purposes is also included as a deduction. crutches, dental treatment, diagnostic devices, disabled dependent care expenses, drugs, eye exams, eyeglasses, contacts, eye surgery, and health institutes. So if you have medical expenses that you pay for treatment at a health institute, it's deductible only if the treatment is prescribed by a physician and the physician issues a statement that the treatment is necessary to alleviate a physical or mental disability or illness the individual receives in the treatment. And I want everybody to understand, and I think a lot of people forget that when you're a cancer patient or you're taking care of a cancer patient, we get so involved with the cost of the care just around the cancer. But a person may have additional medical illnesses that they're paying for out of pocket for additional medications or different treatments. Keep all of these things in mind because you may be going to different physicians. And so you'll need to go to different doctors in order to get those receipts I was talking about earlier. Don't not include that because it's going to be very important for your deductions, to look at your deductions, to go that route, your regular standard deduction, or to look at itemizing a lot of your expenses. Some of the other things can be included are the amounts paid to entitle you, your spouse, or descendant to receive medical care from an HMO. That means medical insurance premiums, hearing aids, batteries, repairs, and maintenance needed to operate, home care, hospital services, what you pay for the cost of inpatient care. You may have only a portion paid every day after you've been in the hospital for a certain period of time. If you're looking at Medicare plans, a lot of those things do apply. And also, if you had to stay in a home or a hotel or something that you needed to stay in while you're getting medical treatment at a facility. It includes costs for meals, of course, your lodging. Now, there are limitations on the daily cost for meals, and it also pertains to if you needed someone there with you to assist you. There are limitations on the amount that you can claim on lodging and meals every day. So be aware of those things and talk to your financial advisor or your tax advisor regarding those. I mentioned earlier insurance premiums. You can include a premiums paid by you that cover medical care. Coverage include tax credits, and they'll let you know what is tax deductible or not. Employer-sponsored health insurance plans, only those premiums that are included on your W-2. So you can deduct the ones that are included in W-2. It's almost as if they pay for them in your behalf, but it's included as income to you. So you have to look at those and you can report those or deduct those. Medicare Part A. If you are not covered under Social Security or were not a government employee who paid Medicare tax, you can voluntarily enroll in Medicare Part A. And in this situation, you can include the premium you paid for Medicare Part A as a medical expense. Medicare Part B is also a medical expense. Medicare Part D, you can also include this because it is also a medical expense. Prepaid insurance premiums paid before the age of 65 for yourself, your spouse, or dependent in the year they are paid and in equally yearly installments or more, often and payable for at least 10 years or until you reach the age 65, but not less than 5 years. These are also included. Any lab fees, out-of-pocket lab fees, long-term care services for qualified long-term care services, and certain premiums paid for qualified long-term care insurance contracts. Now that's a big one. If you've been paying on insurance, long-term care insurance contract for a number of years, this is another way to, I guess, gain some of what you've paid out of pocket. And remember, you can only use a deductible for the year that you paid it in. Medicines, what you paid for and they were prescribed for physicians. So if you go into let's say a pharmacy or a health, a GNC or something, and you wanted to get vitamins because you know some of these vitamins may help, like a vitamin B12. I know a lot of patients get vitamin B12, they may get additional supplements. Unless the doctor prescribed those, then you cannot include that as a deduction or an itemized item. Nursing homes, the cost of medical care in nursing homes. And as you know, if you have Medicare and you need qualified care in a nursing home, you're going to end up paying some of those because they don't pay 100% after a certain number of days. You can write that expense off on your taxes. Homes for the aged or similar for you, your spouse, or dependent. This includes meals and lodging as long as it is to provide medical care. There are limitations that I mentioned earlier, so please see your tax advisor. You can write off visits to the optometrist, eye care, oxygen tanks, physical exams, psychologist, psychiatrist, therapy. There's music therapy. There's all kinds of therapy to help alleviate stress. A lot of those things, if they are prescribed by a doctor to improve your medical health, then those things can be written off. Transportation to and from medical care, including bus, taxi, train, plane fares, or ambulance services. Transportations of a nurse that may need to assist you or be with you when you're getting medical care. Those are also tax are tax deductible. Car expenses, all of those expenses, out-of-pocket expenses when operating a car when in use for medical care. Wheelchairs, wigs, x-rays. I know this list is very large, but again, it's not all inclusive. I would suggest you get ahead of time. You can call your tax advisor before you get your taxes done. Some of tax advisors will send these out automatically every year, so you get your documentation, everything ready. But ask them if they have anything more specific as far as itemized items that you can write off. That way, you won't forget them when you go in to see them the first time. Again, I said this list is not inclusive. I'm only covering those expenses I think that you might need that's important for you to remember. Now, what things are not includable as a deduction or as an itemized item? Future medical care expenses paid for beyond the current year, unless expenses are paid for obtaining lifetime care. Health coverage tax credits, health savings accounts contributions, because a lot of those things come out prior to pre-tax. Household help, even if recommended by a physician, unless that person is providing nursing type services. So you can't come in to have someone come into your house and just do cleaning. That is not considered a medical necessity unless the doctor prescribes it, and very few doctors will prescribe the cleaning of your house. But if they are licensed people are offering and helping you medically, then those expenses are itemizable or deductible. So we mentioned other drugs about non-prescription drugs and medications, except for insulin. Those things are unless they're written by a prescription physician, are not includable. Nutritional supplements and medicine and drugs from other countries generally, unless the cost of a prescribed drug you purchase and consume in another country, if the drug is legal in both the other country and in the United States. And there are a lot of laws that they're trying to change and enact with changing how you can get medications from other countries, because of the cost of medications a lot of times are less expensive in other countries. And those are probably some legislation things that are going to come up in the next year or so. So keep an eye on those. Also, premium tax credits are not deductible. The next slide. Now, how can you reduce your adjusted gross income even in this year, because that you can put in before April 15th, that you can still include in your 2020 taxes? Now, one of the big ones is if you're still working, you still have gainful employment, you can contribute into an IRA, $6,000 a year, or additional $1,000 for anyone over the age of 50. It's very important. You have till April 15th to count toward the 2020 tax year. Now review, and this, and I need to qualify this because the tax filing period or deadline did change for 2020. We don't know how that's going to come about. It may, depending on how the COVID is going, how the vaccines are going, they may push that further out as well. So keep an eye on that. Review your possible itemizations with your filing status. A lot of people will automatically do the standard deductions. I think it's 12,000 for 12,005 for single and 24,000, I believe, for a couple. Now, if you're paying a lot of money out of pocket for your prescriptions or any other medical costs, you may find that you quite rapidly go over that standard deduction. And you might want to look at itemization. You can actually have your tax advisor run it both ways so you can find out which one actually works best for you. They used to be able to do that, and I did that for a couple of people I know last year. But I would suggest you look at those because you want to get the best opportunity and the best, make your taxes efficient and least taxes out of pocket or money out of pocket for you. The next slide. Okay, so care reduce your AGI. Medical care expenses primarily to alleviate or prevent a physical or mental disability or illness. And one of these things is to look at if you have been considering, or you may find that in the near future, you may need to do some changes to your residence, as I spoke earlier, like putting in grab bars in your bathroom, removing carpets or things that where you can easily move over. If you need to have a ramp on the outside of your house, if you need to have a physical therapist come to your house, if you need different lighting, different, a higher toilet seat. I mean, all these things are medically necessities, and it can be prescribed by your doctor, even though you may go to pick them up at a medical care or medical equipment place. Those things can be written off. I would suggest everyone look at their insurance and find out whether you had to buy those first or you'll be reimbursed. A lot of those facilities, those equipment places will take your insurance and they'll file all of that on your behalf, including the Medicare. Now, you cannot include medical expenses that were paid by insurance companies or any other source. This is true even if the payments were made directly to you, to the patient, or to the provider of the medical services. Now, that would include things like pre-funded co-pays or assistance through nonprofits or private individuals. You cannot write those things off because it's almost like a gift to you. It's like, so you have to include that as income for the most part. Talk to your CPA. The next slide, please. There were laws that changed your the amount that you can deduct or itemize had to be 7.5, used to be 10% of your adjusted gross income. It is now 7.5% of your AGI. So anything above 7.5% of your AGI can be deducted. So you have to meet that quarter before you can start writing off those things. So that's also important to remember when you're looking at your standard deductions, because there is going to be some play in there in numbers. Again, if you're using you're spending a lot of money out of pocket for copays, and I know some of these drugs out here like Revlimid is very, very expensive. Make sure you keep in hand receipts and everything for what you're paying and what you're getting from some of these charitable organizations to help cover the cost of those things. Now, so your CPA for CARES Act rules, which allow for loans, RMD changes, or how you file your taxes, those charitable gifts handled. Now, this is really important. A lot of you may have heard of Giving Tuesday. That happened back in November, December. Time seems to fly, and that's when you can contribute to a charity. There used to be cutoffs of what you can deduct off of your taxes, and that was changed. And we're going to go over that as well as some of the other things. Well, let's go over that one really quickly right now. So individuals who do not itemize can claim an above the line deduction of up to $300 for contributions. Individuals who itemize can deduct such contributions up to 100% of the adjusted gross income. So if you made your adjusted gross income was $100,000, let's say, let's start it out, would be nice, $100,000, then if you made a contribution of $100,000 to collective charities, you can write all of that off. So, and also C corporations can deduct such contributions up to 25% of taxable income. And that is for some of you who may have are business owners and own your own corporation is a C corp. Contributions made to donor advised funds are not eligible for the incentives. Now, for those of you who've received or may be looking to receive recovery rebates, the first one was $1,200 per person. if you met certain criteria or income criteria for 2018, 2019. And if you got that rebate and you found it in 2020 that you would qualify for that, then you can go back and use that as a, um, you can actually go back and claim that on your 2020 taxes as a credit, even though you may not have received it. Now looking at the new rebates that are coming out, the $600, and there may be fights down the road to possibly increase that to even more. As long as you qualify for that, it is not deductible. You don't have to file that as income to your taxes. Okay, so that's for 2018, 2019, and 2020 income tax rates. So look at those. And again, if you get close to the line where you can deduct those and you find you may be off a little bit, then maybe consider putting money into, if you're still working, into an IRA, whether that be a traditional IRA. Now, if you have a Roth IRA that's already paid with taxes, you might want to talk to your tax advisor the best way to handle that. The next slide. So miscellaneous things I think you really need to know. Whenever there's a crisis like that, there are always predators out there preying on people to take their money or take advantage of or get information from. And it has already started with the COVID-19 vaccine. And unfortunately, a lot of times they prey on people who are vulnerable, elderly, or people who are ill. So be aware of anybody who make calls to you saying that they will give you something if you give them in return something to get in the head of the line to get your COVID vaccine, and you give out information. Do not ever do that. The vaccine, as long as you are a U.S. taxpayer, U.S. taxpayer dollars will be given to America. The vaccine will be given to American people at no cost, zero cost to you. You don't have to file for insurance generally, but it will give it to you. However, this is something you need to be aware of. If you find that you go and get a vaccine whenever you get that, and your prescriber says there is a fee, they may be given a fee for administration of that drug, and they are allowed to do that. So, that should be the only time you have to pay for anything for this vaccine. So be aware. Anybody calling, asking for information and saying they can get you ahead of the line, or because that is a scam. And they are out there, and they're going to try to catch as many people as they can. Vaccine providers can get this fee reimbursed by the patient's public or private insurance company, or for uninsured patients by the Health Resources and Service Administration's Provider Relief Funds. So don't pay for that vaccine, maybe just a administration fee. And I do not know the cost of that, and they may differ among providers. The next slide. Okay, so we went over a lot, and I apologize. It's whenever you do anything with taxes, if you've ever seen a tax code book, it's the most unbelievable thing. It's like it's like going to a horror movie that just never ends. So I encourage you to start getting your documents together now, and so that you'll make one trip to your CPA. And right now is even more challenging, because a lot of your CPAs are not doing things in person; they're doing things virtual. And it's really a strange way to do your taxes, especially when you have boxes of receipts and you have questions. So I would encourage everyone to talk to their pharmacy, whatever pharmacies, one or two that you used for 2020, any doctors or care providers that provided medical care to you, you can contact them and they can print off what you paid, or you can call your insurance company. They'll show you what was out of pocket. If you have your EOBs, evidence of benefits, or what was paid out to your insurance companies or what you paid out of pocket, get those things together. It'll make your tax handling process go a lot faster. And then also keep in mind the cost for traveling to and from for medical care, the cost for your car, like I said, any things you've done to your homes. A lot of those things are tax deductible. What you're trying to do is to find as many things that you pay for out of pocket in the year 2020. Include premiums, Medicare Part A, B, D, and anything out of pocket. If you paid cash, you need to go back and look at those receipts or things you got from your doctor's office, because they'll prove that you have made those payments. get those things together so that when you talk to your CPA, you'll be able to have all that stuff together. Okay, I'd like to go to questions.
Thank you so much. Let me start my video again here. That was amazing. That was a lot of information, but I feel like you explained it very well. And I'm excited to see the different questions that we get. For those of you who are unfamiliar with Zoom, there is a section that says Q&A. Please enter your question there and we will be able to answer those for you. So let me see. Got to make sure that I'm, hold on. It's not popping up, so I'm trying to find it here. Let's see.
While she's looking for that, I want everybody to know that if you've, I'm always surprised that a lot of people don't know that there are benefits and things available for them to help take care of medical expenses, especially prescriptions that are extremely high. And one of the things that I do is help people find those resources. Please reach out to me. I will help you find the resources so you can not get in this. If you get in a donut hole, we call it a donut hole, or if you get to the point where you realize that Revlimid or that that medicine is way too high and you can't cover it, and you see your savings account deplete, you probably have some options available to you, and you might be surprised at what your income level can be to still get help. Please don't wait until you're in a crisis, and also talk to your doctors. A lot of people don't want to discuss this with doctors, and doctors, quite frankly, the majority of doctors won't bring it up. They assume it's not part of their job. But if they're giving you health care, if they're giving you care, and there's a cost associated with that care, including sitting down, talking to them, and not getting a prescription, there's a cost to that. And they know it because that's their income. Then you need to discuss that with them, and don't wait until you get into a crisis, financial toxicity, before you do it, because whatever you're paying for your prescriptions, that money is coming away from something else you might need in your household, to pay for your mortgage, to pay for food, for gas, for anything else. So in addition to that, I encourage everyone to find a financial advisor. Financial advisors now are looking at healthcare because it's one of the biggest costs you're going to have now and when you retire. A lot of people don't realize that at the average age of retirement, before, within 20, 25 years after retirement, for a spouse, it's going to be $250,000 out of pocket. How many people have about $250,000 out of pocket? And that is with their insurance to pay for, and that is average. Now pile on an expensive medical illness like cancer. And cancer is the highest illness that causes financial toxicity. There are a lot of financial advocates. It's becoming a growing program to help people find resources and help them look at their options available to them before these problems exist.
Great. Thank you so much for sharing that. I think it's so important to let people know, especially like you were saying, there is help out there and we want you to be getting that help so you're using your money for things that you really need.
Correct.
So I did find the questions.
Good.
So we have a question that says, will the slide program be available for download afterwards? The answer is yes. After each of these sessions, I am sending not only the slides to you, but also I upload the video to YouTube and I send you the YouTube link as well. So if you ever want to go back and look at this, you're more than welcome to. So that will be emailed to you using the email. It will obviously be sent to the email that you used to register, both the slides and the download. We have someone say, do I have to show copay relief grant as income?
Very interesting. You don't have to show that as income because they're called grants and they came usually from nonprofits. You do not have to show that as income.
Okay.
It does not, though, apply to deductible. So therein lies the, the problem with how much you're going to pay out of pocket and how much you don't.
Right. And we have a similar one. This is, I have a grant to pay for my out-of-pocket costs for Revlimid and Ninlaro. I have no out-of-pocket expense for these meds. Is there a tax consequence?
No, there isn't. And it applies the same way that I was talking about earlier.
Okay, wonderful.
And a lot of people don't realize you can get like Celgene, which is now Bristol Myers. They're the ones who do most of the Revlimid relief, copay, deductible expense opportunities. They you can go to more than one place. If you find if you have your prescriptions in one place and they give you a cap that they may be able to give you on those 12, 13, whatever it is a year, you can apply for that every year. A lot of people think I only got it 1 year, I can apply for it you can apply for it every year. And I suggest you guys get all your paperwork and everything together so you can get those in as soon as possible, because it's on a first come, first served basis, especially if you're looking at nonprofits that give financial help like Leukemia Lymphoma Society, Cancer Cares. A lot of times they run out relatively early in the year. That does not mean they may not have another program through some of their fundraising venues that will open up again later in the year. The problem with that is, I don't know if you're aware.
Hold on, Diana, we can't hear you. Do you want to adjust a little bit and see if we can hear
Okay,
you?
is that better?
Yeah.
Can you hear now?
Yeah.
Okay, so what I was saying is to apply early for some of these grants, like through Leukemia Lymphoma Society, Cancer Care, those things run out of money fairly quickly. They may have funds available during the year because they have these fundraising activities through the year. But what you're going to find this last year, because a lot of those activities were canceled because of the COVID. So their funds may not be as abundant as they were the last couple. So I would suggest you get your applications into those as soon as possible. And they may be on a fiscal year, or they may be on a calendar year. You might want to check that as well. So if you got something as a grant, let's say through the Patient Advocate Network, PAN network. So you got, let's say hypothetically $8,000 and you got it in September. So that's going to run from September until September for your calendar year. Now, if you don't use that money, they're gonna call you and say you're not using that money because you may have gotten a grant from someone else. But they're gonna call you, and if you don't use it, then you're gonna end up losing it. Mm-hmm. So be aware where you're getting your money from, and know what your expenses are, and you can help with some of these things from the CARES Act for food, for medicines, not just medicines, but from copays, deductibles, for when you go into your doctor's office, you have additional expenses for labs. A lot of those things will cover those things as well. And they will specify that in your grant.
Okay, thank you. We have some clarification questions. They wanted to make sure that the AGI is the amount after you've deducted the costs that you mentioned.
Yes, your adjusted gross income is going to be everything after everything is gone. That's what your income is. That's what you're going to pay your taxes on.
Okay.
And so you want to reduce your AGI, you want to reduce your income, your adjusted gross income as much as possible.
Perfect. And then they just wanted to clarify that the deductions must exceed 7.5% of this AGI. Mm-hmm. And best if it exceeds standard deduction.
Right.
Okay.
Right.
Cool. I'm glad that they asked that question because I had the same one. I was like, whoa, I need a tax advisor.
Yeah, you can either deduct or you can itemize. And the best way to find out which one is better for you based on how much you've paid out of pocket.
Wonderful. Okay. And we have another person say that they heard that the COVID-related tax deductions are going to continue into 2021. How does that work and where do we find information for that?
It's very interesting. A lot of those things will continue through 2021, but because of a lot of the administration, a lot of that legislation has only come out just recently in the last week, and everybody don't know. Even a lot of your tax advisors are not sure what's going to happen. So, so just stay tuned. As when I find out, I will do more of these webinars to keep you guys up to speed on what's going on.
I think that's important. I'll just put a little plug in for that as well. You know, things are constantly changing right now, and this myeloma financial coach chapter is going to be happening every month. It will have a different audience each month, but we'll make sure that that information is uploaded publicly so that everybody can know. And we might even have surprise webinars if there's a big announcement that we think are important for this audience. So we just wanted to let you guys know that we will do our very best to keep you informed. Jolene and Keith said that they would like to thank you publicly, Diana, for your assistance in getting them online with the Celgene Patient Care Services to pay for the cost of the Revlimid. You are truly a gifted caregiver to all of us. Thanks from Keith and Jolene.
Oh, you're welcome. Thank you. It's nice to hear that things are working out for people. That really makes me feel good when people are able to get a benefit out of this.
Yeah, that's great. I'm so happy. That's why we do what we do, is to try to help you guys the best that we can. Then the question came, did you say that the $1,200 payment that was made because of COVID did not have to be included as income for tax purposes?
That is absolutely correct.
Okay, that's good to know. And that's all the questions that we have for now. You can continue to answer your questions. Ask your questions, and we will do our best to answer them. And again, Diana, I'm just really impressed by all the information that you had for us. I know that was a super long list. And I don't know if there's some way that you could send me that list and I could include it in the email that I send to all of our registrants. I think that would be.
What I would like to do is I would like to send you several things. And one of these documents would be an itemized list, like the list, just the medical, but I would like to give you a better list where people know what to actually start gathering. I could put all that together for you and then you can send out to all the registrants for this webinar. In addition, because I'm not a mind reader, I know because I went through this because my husband had myeloma and I was a caregiver to him for over 12 years. And I walked the halls many a night because in 2012 to June 2012 to November 2013, he was in the hospital almost the entire time in intensive care. You know, he'd come out doing really well, but then he had some other issues as well. And I got a chance to speak to a lot of people, and it was the most humbling time of my life. And but it was also the most enlightening time of my life. And as a financial advisor, I help people with their money, you know, to make more money. And that was great. But I know that experience, and I'll share this, is very personal to me. My husband was on life support and he came off life support when he could barely talk. And I was sitting down talking to him on the bed. He said, and I said, honey, I can't imagine my life without you. And I said, who's going to be there if I'm old or I'm sick? Who's going to take care of me? And he said, I will. And I said, and I hesitated, and I said, and I wonder, well, what is that? I will. And this, what I'm doing, is his way of taking care of me. It actually put me in a place that I'm supposed to be. And it is the most profound experience of my life. And it is the most endearing thing I've ever done. I was supposed to go to medical school, I was accepted to medical school. And I am so blessed that this other things happened in my life to put me where I'm supposed to be. Yeah. Where I actually can make a difference. And that you don't feel like you're lost. And there's something, if for anybody, I don't care what your income is. I don't care what your economic, your educational background is. There is something I can do to help your situation. And I am here as a resource to you.
Thank you. I know that is very much appreciated, and you really do put your whole heart into this work, and we're very grateful to have you as our myeloma coach. We have another question. She says, I pay my health insurance and get reimbursed later. I have the receipts. Can I deduct this on my taxes?
You paid it and you pay it out of pocket, and then you get reimbursed through what? A health savings account?
I'm not sure. So
if you're reimbursed through a health savings account, then no, because health savings account are usually pre-tax. You've already gotten that tax benefit.
Okay. And then Jenny says, we love you so much, Diana. Thank you for your service.
Oh, thank you. Thank you, guys.
And Jack says, that's a wonderful story. Thank you so much.
You're welcome.
It really is inspiring, like, especially working in a nonprofit, we want to share the why. It's not just because, we showed up here at the myeloma crowd. And also a big shout out to our founder, Jenny. She is a myeloma patient herself. And when she was diagnosed with myeloma 11 years ago now, it was her, she wanted all of these resources and she wanted all of these programs, and she had a vision, and she's worked extremely hard these last 11 years so that these resources and these programs through the myeloma crowd can be available to you guys. So she works incredibly hard. Diana and I love working for her, and it's why we do what we do, is because she has that perspective of a patient and she knows what is needed and she makes it happen. So that's why we do what we do. This is the Myeloma Coach the Myeloma Financial Coach chapter. We also are going to be opening up new chapters. We have a fitness for myeloma chapter. That's going to be on Wednesday. We're going to have a nutrition and wellness chapter open up in a couple weeks. We're going to have a newly diagnosed chapter, a caregivers chapter. We're launching this events platform because we want to connect with you, and we want to take all of the resources and programs that we have, and we want to provide them for you in a very real way through support groups online and through webinars like these. So we hope that you enjoyed this session. We are glad that all of you were able to attend. We will keep it open for a couple more minutes if anybody has any extra questions. Again, I just want to make this clear that while Diana is a financial advisor, you should contact your tax advisor if you have any specific questions about what she has talked about. Again, we will be sending these slides, the video, the resources to you through email. Take those, if you have any questions, to your tax advisor and say, well, what about this? Does this apply to me? Because we just want to make it as smooth as possible for you to untangle your 2020 taxes.
Perfect.
And it says, thank you all, Diana, your story is beautiful. And I agree.
Thank you.
We also want to announce that we are going to have a special Myeloma Financial Coach webinar in March. You will be notified if you have subscribed to the Myeloma Financial Coach chapter. This special webinar will be for veterans. Veterans have such, and correct me if I'm wrong in explaining this, Diana, but they have special financial assistance and also, different costs to them. And so Diana wanted to put together something specific for myeloma patients or caregivers that might be veterans, because you have a specific, I don't know the word that I'm looking for, but it's
specific needs, specific needs. And it amazes me how many veterans are not aware of, even through the Veterans Administration, things that are available to them.
Yeah.
So I would like to cover those things and make sure they get as many of the benefits that are available to them that they can get.
Yeah, I agree. Okay. We just have somebody, I'm just typing an answer here. They just were wondering if we're going to include a written report that they could bring to their doctor. Again, we're going to be sending the slides, a video, and any PDFs that Diana sends me. That being said, in the slides will be Diana's contact information. And if there is anything that you have extra questions about, or anything that was, hey, I would really like to understand this a little bit more before I go to my doctor, you can use her contact information in the slides. It's my financial coach, MY financial coach at healthtree.org. You can contact her and ask any of those follow-up questions.
And I would also encourage everyone, if you haven't already, go to the Myeloma Coach program or go to sign on to HealthTree. There is so much information out there, and it's so easy to understand the way the educational tools and resources have been put together. And I don't know anyone that cannot get information and get help from the resources that are out there. And we are, and Jenny and we're just expanding this information resource out there. It is so invaluable. No matter where you are in your disease process, whether you're newly diagnosed, you have MGUS, you're waiting for things. I mean, there's financial resources, they're educational about your disease. There are people you can connect with who may be very similar. It is it is one of the best website tools I think that's out there for you. And you can take a lot of this information to your doctor as well, and it can help you determine what kind of treatment. There's so many things out there. Please take a look at the health tree. It's invaluable to you.
Thank you. Thank you for that plug. I agree. We have one more question, which I think is a very important question. I was actually going to ask this question as well. So she says she usually uses TurboTax, and this will be her first year with the multiple myeloma expenses. Is TurboTax still okay to use? Is it ideal to use? Is it okay? What are your opinions, when you have such itemized costs using TurboTax?
Very good question. And actually, my husband and I had this decide what we are going to do with this several years ago, because he used to do the TurboTax, and he sat down there and he was there for hours, and invariably had to go back and do another addendum or redo his taxes. And we found that the time that was involved for him to do that, depending on how complex your situation be, it could be more time efficient and less costly in time to see a professional. There are a lot of programs online that you can do, and if you end up with a problem, it connects you or shows you where the error is, and you can go through it before you print things out. Now, when you're going through TurboTax, I just, they're great programs, but I would hate for you to miss anything with all the nuances and everything for when you have a cancer and you're dealing with multiple providers, healthcare providers, and multiple needs. If you're really good at it and you've done these things before, great. Personally, I find it a lot more beneficial to work with a professional who knows what they're doing, so you don't miss anything.
Awesome. Thank you. Thank you for sharing that. Um, okay. We just have one more person saying that they're going to reach out to contact you about financial questions. And interestingly enough, they said that they also speak to the financial coach at Penn State Hershey Cancer Institute, which I think is important to add. We do have Diana. She is awesome. She's a myeloma coach, financial coach specifically. But there are other resources out there for you as well. Like Diana was saying, ask your healthcare facility what they can do for you, especially before you get into financial toxicity. Like, look for resources around you. So I'm glad that this was brought up. Look for the financial helpers in your area, especially with the specific medical facilities that you go to. So that is an important plug, and I'm glad that that was included here.
Great, thank you. And I want to bring this out real quick, and I'd like to do this every month, so everybody will know what to look forward to for the next month. Now, we've already mentioned we're going to do the veterans, the special veterans in March, but next month I would like to look at estate planning. Very huge, and a lot of people think you have to have a lot of money for an estate plan, and that is not true. And it covers a lot of things. So I would like to use that to let everybody know that is going to be our topic for February.
Awesome, thank you. So stay tuned. You can subscribe to the Myeloma Financial Coach chapter by going to www.myelomacrowd.org/chapters. Or, we will be continuing to promote these, giving updates. And we'll make sure that you guys hear about our February 2nd event, which will be estate planning. So thank you all for attending. We really appreciate your participation and your patience with us. And we just got one more question, so I'll end.
Okay, that's fine.
I'll answer real fast. Oh, it was a follow-up. So she was saying, I think it was the one. Okay. Actually, I'm just gonna reply to that one personally because it was just a
Okay.
follow-up from a before question. So again, thank you guys all for attending. And we will be sending you those resources, and please reach out to Diana or even I. You can reach out to me, Audrey at healthtree.org, if you guys have any questions. So thank you very much,
Thank
and
you.
hope to see you next month.
Bye.